Discover the secrets behind Bitcoin's soaring value and how to profit from its growth. In this video, we'll dive into the underlying factors that make Bitcoin the most valuable cryptocurrency in the world. From its limited supply and decentralized nature, to its potential for widespread adoption and the growing demand for digital assets, we'll explore the key drivers behind Bitcoin's remarkable success. Whether you're a seasoned investor or just curious about the world of cryptocurrency, this video is for you. So, what makes Bitcoin so valuable? Let's find out. Join me as I dive deep into the world of Bitcoin and try to uncover what really makes it so valuable. Did you know that Bitcoin's market value surpassed $1 trillion for the first time in 2021, making it one of the most valuable assets in the world, even more than some major companies like Tesla or Facebook? What makes this digital currency, created by the anonymous figure Satoshi Nakamoto over a decade ago, so valuable? Bitcoin's worth can be attributed to several key factors, including its decentralized nature, the security of its blockchain technology, and the limited supply of coins. Unlike traditional currencies controlled by governments, Bitcoin is not subject to inflation or central authority manipulation, giving it a unique edge. Additionally, its growing acceptance as a legitimate form of payment and a store of value during times of economic uncertainty has fueled its rise. With only 21 million coins ever to exist, Bitcoin's scarcity plays a huge role in driving demand and value. Bitcoin has become a global phenomenon in recent years, drawing the attention of investors, businesses, and everyday users alike. What started as an experimental digital currency in 2009 has now transformed into a widely recognized asset with a market value that rivals some of the world's largest corporations. As its popularity continues to soar, people are increasingly wondering, what exactly makes Bitcoin so valuable? Is it the technology behind it, the promise of financial freedom, or something else entirely? To answer that, it's important to explore the unique qualities of Bitcoin that set it apart from traditional currencies and contribute to its growing worth. Several key factors contribute to Bitcoin's remarkable value, setting it apart from traditional currencies and digital assets. One of the most important is its inherent scarcity. Unlike fiat currencies, which can be printed endlessly by governments, Bitcoin has a fixed supply. Only 21 million coins will ever exist. This scarcity, combined with increasing demand, creates a natural sense of value, similar to precious metals like gold. As more people seek to own a piece of Bitcoin, the limited supply drives its price higher. The fact that the maximum number of Bitcoins is capped makes it a deflationary asset, contrasting sharply with inflationary fiat currencies that can lose purchasing power over time. Another major factor is decentralization. Bitcoin operates on a peer-to-peer network, meaning it is not controlled by any central authority such as a government or bank. This decentralization is made possible by blockchain technology, which ensures that transactions are verified and recorded transparently without the need for intermediaries. The decentralized nature of Bitcoin provides a level of freedom and autonomy that traditional financial systems cannot offer, allowing users to send and receive value across borders without the interference or surveillance of centralized institutions. This level of independence and privacy has become a major draw for those looking to protect their wealth from economic instability or government control. Bitcoin's role as a digital asset is also a significant factor in its value. In an increasingly digital world, Bitcoin has emerged as a new form of money and store of value that exists purely in the digital realm. For many, it is viewed as a safe haven asset, similar to gold, particularly in times of economic uncertainty or market volatility. Bitcoin is often seen as a hedge against inflation because its supply is fixed and cannot be easily manipulated. Its growing acceptance as a legitimate asset class by both individual investors and institutional players further solidifies its place in the modern economy. Furthermore, Bitcoin's global accessibility adds another layer to its value. Anyone with an internet connection can buy, sell, or use Bitcoin, enabling financial inclusion for people who are underserved by traditional banking systems. In regions where access to banking services is limited or governments face political or economic instability, Bitcoin offers an alternative financial system that is more accessible, secure, and often more reliable than local currencies. Together, these factors, scarcity, decentralization, its digital nature, and its growing acceptance, combine to make Bitcoin not just a form of digital currency but a highly valuable asset in the modern global economy. Its ability to transcend borders, offer financial freedom, and act as a store of value positions Bitcoin as a unique and powerful financial tool for the future. Investing in Bitcoin requires a clear plan, smart strategies, and an understanding of both the risks and opportunities involved. Before we dive into the best plans and strategies to increase your wealth with Bitcoin, we're committed to bringing you the best content to help you grow your financial portfolio. If you're finding this video valuable, please hit that like button, share it with anyone who could benefit from this information, and leave a comment with your thoughts or questions. And don't forget to subscribe. We're dedicated to providing you with smart wealth strategies you won't want to miss. Before jumping into Bitcoin investment, it's crucial to understand how the market works. With more institutional players involved and potential regulatory changes, staying informed will give you a better edge. Follow trusted sources, such as Bitcoin news platforms, reputable financial analysts, and cryptocurrency forums. Monitor developments such as regulatory news, e.g., SEC rulings, country regulations. Bitcoin adoption trends, e.g., more businesses accepting Bitcoin. Market sentiment, e.g., institutional investments, retail adoption. For those new to Bitcoin, dollar cost averaging, DCA, is a proven method to accumulate Bitcoin over time without worrying about short-term market fluctuations. Rather than trying to time the market perfectly, invest a fixed amount at regular intervals, weekly, bi-weekly, or monthly. This strategy helps mitigate the risk of buying at a market peak while gradually building your position. For example, invest $100 or $200 each month in Bitcoin. Even if Bitcoin experiences significant volatility, you're less likely to get caught in market swings because you're averaging your purchase price over time. To securely buy and store Bitcoin, use well-established and regulated cryptocurrency exchanges like Coinbase, Kraken, or Binance. These platforms offer user-friendly interfaces, security features, and integration with popular wallets. When it comes to storing Bitcoin, avoid leaving your funds on exchanges for long periods, as they are susceptible to hacks. Instead, use hardware wallets like Ledger or Trezor, or software wallets like Exodus or Electrum for safer long-term storage. Many successful Bitcoin investors have benefited from holding their Bitcoin over the long term, also known as the HODL strategy. In the past, Bitcoin has experienced cycles of significant price drops followed by dramatic rebounds. If you believe in Bitcoin's long-term value and adoption, holding onto your Bitcoin during volatility could yield substantial returns in the future. Make sure to only invest money that you are willing to leave in the market for several years. Bitcoin's long-term upward trend is based on growing adoption, scarcity, and its use as a store of value, making it a good option for those with a long-term view. While holding Bitcoin long-term is one strategy, you can also plan a specific exit strategy to take profits when the market is strong. In a bull run, it's common for Bitcoin to surge quickly, and many investors choose to sell part of their holdings when it reaches certain milestones. For example, set profit-taking levels if Bitcoin reaches a price point you're comfortable with, e.g., $100,000 or $150,000 per coin. Consider selling a portion to lock in profits. Use stop-loss orders, set automatic sell orders in case the price starts to decline unexpectedly. This helps protect your gains from sudden downturns. If you're not comfortable directly purchasing Bitcoin, there are alternatives to gain exposure to its price movements. Consider investing in Bitcoin ETFs, exchange-traded funds. Funds like the Grayscale Bitcoin Trust or potential future Bitcoin ETFs allow investors to gain exposure to Bitcoin without directly owning the asset. Bitcoin mining stocks or funds investing in companies that mine Bitcoin can provide indirect exposure to its value. These stocks tend to move in line with Bitcoin prices. Bitcoin-related companies investing in companies that accept Bitcoin or are involved in the blockchain industry, like Square or Tesla, can also be an indirect way to profit from Bitcoin's rise. In the growing decentralized finance, DeFi, ecosystem, you can earn interest on your Bitcoin holdings by lending them on platforms like BlockFi, Celsius, or Nexo. While there are risks involved, these platforms allow you to earn yield on Bitcoin just by holding it in your account. Typically, rates range from 4% to 6% annually, but these can vary based on market conditions. However, always be cautious when using these platforms, as there are risks associated with lending and borrowing in DeFi markets, such as platform insolvency or market volatility. While Bitcoin is a highly volatile asset, it's crucial not to put all your financial resources into a single asset. Diversify your investments across different asset classes, such as stocks, bonds, real estate, and precious metals, to reduce risk and create a more stable portfolio. Even if you believe Bitcoin's value will rise, diversifying helps protect you from sudden downturns in the cryptocurrency market. The cryptocurrency market is known for its extreme volatility. Bitcoin's price can fluctuate significantly in short periods, even during bull runs. If you're in for the long term, don't panic during short-term dips. Stay calm, stick to your strategy, and remember that Bitcoin has historically recovered from downturns and continued its upward trajectory over time. Bitcoin's increasing popularity means that tax authorities are paying more attention to crypto transactions. In many countries, profits from Bitcoin are taxable as capital gains. Be sure to consult a tax advisor about the tax implications of buying, selling, and holding Bitcoin in your region. By planning ahead and keeping records of your transactions, you can avoid surprises when tax season comes. Thanks for watching. If you enjoyed this video and want more insights into Bitcoin and how to capitalize on its value, make sure to like, comment, and share it with your network. Don't forget to subscribe and turn on the bell notifications, so you'll always stay updated on the latest tips and strategies. See you in the next one.